When you've decided to buy a car, you'll also be deciding on where to go for a car loan. It only makes sense since the price of a car usually runs into the tens of thousands of dollars, and even if you can afford to buy a car in one lump sum, it may make more financial sense to pay for it over time. When you do start shopping for car loans, your financial history becomes the topic of conversation, as your potential lenders will want some confirmation that you can pay the loan off. Many lenders will want to verify your income before finalizing a loan, especially where there are problems with your credit. Pay stubs are commonly asked for, but in the case of independent contractors, tax returns are a verifiable form of documentation that earn what you say you earn. Lenders assume risk whenever they approve a loan. Though the occurrences of clients defaulting on their car loans are fairly rare, it does happen, and lenders have to guard against the losses they can suffer as a result. Normally, a history of good credit would guarantee approval on car loans, but when a lender is faced with a borrower who does not have a steady or conventional sort of income to match the amount being borrowed, an additional accounting of finances is required. For this, your lender will request your tax returns to verify the stability of your income. The requirements for showing a pattern of earnings may require forms going back for several years. Some lenders will ask for tax returns going back as far as 7 years. These, in conjunction with credit scores and a copy of your annual credit report, will usually guarantee approval if you have an unconventional source of income. No matter what your tax returns indicate, shopping for the right lender is still necessary to secure a car loan at the lowest possible interest rate. But some lenders may treat you the same as someone who has bad credit. Your credit scores may indicate that you have excellent credit, but an independent contractor's income may cause a potential lender to ratchet up your interest rates. If you have less than perfect credit, your tax returns may help where your credit scores couldn't. Again, a potential lender will ask to see several years' worth of returns before approving a car loan. Your returns are legally verified assertions of how much money you make. A lender reviewing these documents will weigh them against the current debt load you carry, and will approve your car loan if your income can clearly accommodate your monthly debt payments along with the additional loan payments. In approaching a lender for a car loan, you should have your credit scores, a copy of your annual credit report, pay stubs, and tax returns on hand. Nothing says responsibility like doing some of the legwork for the lender when applying for that new car loan. The financing world lives on documentation, and having all of your ducks in a row goes a long way to securing a good reputation with any prospective lender. The key point is not to be intimidated by the request for your financial information. Each lender has its own criteria for what constitutes a qualified borrower. You just need to do what's needed to qualify. Federal Auto Loan. Good credit, bad credit, no credit, all good.